In this video, we are going to review the markets. It is Sunday, June the 16th, 2024. If you like this content, if you enjoy futures trading, day trading, and all things the financial markets, please make sure to like, comment, subscribe, and make sure to use the affiliate links in the description box below. In the description box below, you can find affiliate links to Apex Trader Funding, Topstep Trader Funding, American Blue Cash Preferred Credit Cards, and the Trading Pit. Okay, guys, we are starting on a new week, the week ending in June 21, 2024. And in this video, we're going to briefly cover some of our news headlines and have a look at some of our charts so that you are better prepared for the week ahead in the week ending June 21, 2024. I want to thank you all for joining me. Thank you for engaging with the video, commenting, and subscribing. Okay, guys, starting with some of our Bloomberg headlines. How the U.S. mopped up a third of the global capital flows since COVID. The trend marks a major shift from the pre-pandemic days when capital poured into emerging markets, including a rapidly growing China. On related headlines, for bond traders, data matter more than what the Fed is saying. Kashkari says Fed well-placed to take its time ahead of rate cut. Fisher sells stake of up to $3 billion to Advent Abu Dhabi fund. Evercore ISI sees S&P 500 gain raging on, upping target to 6,000. And Roaring Kitty's $262 million stirs skeptics in meme stock era. Okay, guys, let's have a look at this article about Evercore. Evercore ISI sees S&P 500 gain raging on, upping target to 6,000. Emmanuel's previous target was among the lowest on Wall Street. Strategist sees cooling inflation, AI hopes pushing S&P 500 higher. The headline goes on, with the S&P 500 index setting record after record, Evercore ISI is predicting another double-digit rally through the end of 2024. Julian Emmanuel, the firm's chief equity and quantitative strategist, raised his year-end forecast on the S&P 500 index to 6,000, the highest among major equity strategists tracked by Bloomberg, and roughly 10% above the gauge's closing level on Friday. That's an about-face from one of Wall Street's most prominent bears who previously expected the gauge to finish the year at 4750. Optimism over a resilient economy, improving corporate earnings at the end of the Federal Reserve's tightening cycle has pushed the S&P 500 up 14% this year, and Emmanuel says ebbing inflation and artificial intelligence fervor will propel stocks even higher. Emmanuel's new estimate tops the 5,600 level Goldman Sachs Group, Inc.'s David Kostin, UBS Group AG's Jonathan Golub, and BMO Capital Markets' Brian Belsky are penciling in. Quote, "The pandemic changed everything," Emmanuel wrote in a note to clients on Sunday. "Record stimulus, elevated cash balances, and low leverage support the consumer. Then came AI. Today, Gen AI's potential in every job and sector is inflecting. The backdrop of slowing inflation, a Fed intent on cutting rates, and growth support Goldilocks." Emmanuel also raised his estimate for the index's per-share earnings in 2024 and 2025 to $238 and $251 respectively. The new levels imply an 8% and 5% profit growth, he said. While AI exuberance has pushed valuations to the top decile since 1960, the S&P 500's price-earnings multiple may remain elevated for extended periods, Emmanuel said. The move comes after Goldman's Kostin on Friday upgraded the firm's year-end target for the S&P 500 for a third time, reflecting Wall Street's optimistic outlook for earnings growth and the U.S. economy. Among the big Wall Street banks, JPMorgan Chase & Co. has the lowest year-end target for the S&P 500 at 4,200, implying a drop of more than 20% from Friday's closing level. Okay, guys, let's have a look at some of our latest market headlines. All right, we have read those. Let's move on to financial juice. All right, this is from Friday. Anxiety grips market on political turmoil, U.S. markets wrap. A renewed wave of anxiety gripped global markets as concerns about a political crisis in France worsened, driving stocks lower and sparking a flight to haven assets such as bonds, gold, and the U.S. dollar. Traders reduced their risk exposure, with French shares losing approximately $210 billion in value this week, equivalent to the size of Greece's economy after President Emmanuel Macron called a snap election. Since then, France's bonds have been at the center of the sell-off, with investors demanding a record premium to own 10-year debt over safer German peers this week. In the United States, stocks struggled to gain traction as a measure of consumer sentiment unexpectedly fell to a 7th-month low as prices continued to weigh on personal finances. Despite the positive news in the most recent data, Federal Reserve of Cleveland President Mester believes inflation risk remain tilted to the upside. Treasury 10-year yields fell 4 basis points to 4.21%. The dollar reached its peak since November. This week, the euro was one of the worst performing major currencies against the dollar. Okay, guys, and now we're over on Tradingview. Let's see if we have any headlines or anything that we want to talk about here. All right, guys, I'm going to read the top story headlines. These are all from a few days ago. USD JPY, Bank of Japan holds rates steady. Yen plummets beyond 158 yen in 6-week low. From TradingView 2 days ago, S&P 500 NASDAQ logged 4th record closing high this week, 5th one coming. This is also from TradingView. Tesla stock pops 3% after Elon Musk gets board to approve $56 billion pay package. From Dow Jones Newswires from 2 days ago, Bank of Japan maintains policy rate will reduce bond buying. From Dow Jones Newswires 2 days ago, New Zealand's manufacturing sector extends deep contraction. Then from 3 days ago, BTC USD, Bitcoin loses inflation-driven gains after Fed event knocks optimism. From TradingView 3 days ago, Euro USD, Euro gains fade after bright CPI report gets clouded by Fed pessimism. 3 days ago from TradingView, Apple stock briefly overtakes Microsoft as tech giants race for #1 spot. Fed holds rates at 5.5%, trims down projections to 1 from 3 rate cuts this year. Okay, guys, not a ton of news coming in, but let's have a look at some of our top headlines to get you ready for the week. 10 minutes ago from Market Watch, big tech, not the Fed, is driving the stock market rally. Here's what investors need to know. And then some of our other headlines. Update 1, Asia morning call, global markets. Let's see if there's anything here. This is all about Friday. Asian morning briefing, U.S. stocks mixed amid further signs of cooling inflation. And this was published today. Let's have a look at this, guys. This is from Dow Jones Newswires. Asian morning briefing, U.S. stocks mixed amid further signs of cooling inflation. Market snapshot, technology and communication services shares lifted the NASDAQ composite to another record high, while the S&P 500 edged lower and the Dow fell for a 4th straight day. Treasury yields fell as signs of U.S. consumer fatigue and slower than expected inflation supported bets on interest rate cuts. The dollar strengthened, buoyed by weakness in the yen and euro. Oil prices posted their first decline in 5 sessions. Gold prices rose. And let's see here. Today's top headlines. Consumer sentiment falls to 7-month low on worries over inflation and weaker incomes. The numbers. An early reading of U.S. consumer sentiment in June fell to the lowest level in 7 months, reflecting lingering worries about high inflation as well as slower growth in household incomes. The first of 2 readings in the Consumer Sentiment Survey dropped to 65.6 this month from 69.1 in May, the University of Michigan said Friday. The index has fallen 3 months in a row. All right, expected major events for Monday. If you're watching the screen here, we have some data coming out on Monday. Okay, guys, let's see if there's any other interesting items. We're going to have a look at Forex headlines. All from a few days ago. Let's take a look at our index headlines. Futures headlines. Flooding hits China south. Temperature sizzle elsewhere. Here's how to buy the dip in copper prices. Okay. All right, guys. Well, I want to provide you a brief overview of some of our markets on the charts. We've read most of our headlines here coming in on Sunday. So let's have a brief look at the charts. Okay, guys, this is our Euro futures chart on a daily perspective. Now let's have just a brief look at ES. ES on the daily perspective. Last print at 5,500.25. Let's have a look at crude oil. Last print was at 78.49, above that 20-period simple moving average. Closing the day right at that 50% point. Have a look at crude oil on an hourly perspective. See that Friday's trading on a, 15-minute perspective, mostly in a trading range on Friday. Let's have a look at the NASDAQ. NASDAQ on the regular trading hours, we can see that we did chop a little bit, but traded and closed, again, right around all-time highs. And finally, guys, gold, having a look at gold on a 15-minute chart, regular trading hours on the bottom right. Our last print on the 15-minute chart was right at that 20-period simple moving average. Gold's last print at 2,347.1 on gold futures. So gold futures trading higher on Friday. And our biggest movers on Friday, soybean futures down 3.34%. Last print at 1,149.0, trading pretty much lower throughout the day on Friday. Then our biggest gainer on Friday were silver futures. Silver finishing the day, last print at 29.630. Okay, guys, not a whole lot more to report. I appreciate y'all's attention. If you are interested in supporting this channel and you enjoy the futures and financial markets, then please make sure to like, comment, and subscribe. It really helps. Thank you, and good luck trading, guys. We'll talk to you tomorrow.